Yeah, good afternoon, everyone. This is Ravi Kumar. I'm from Nestavia Home Finance. We are a startup. As the name suggests, we are into housing and we also do LAP as well. Previous to this company, I was working with a company named IKF Finance. I was a group CTO over there, working on two different portfolios of vehicle financing as well as housing finance as well. And before that, I worked with several other NBFCs like Spandana Spurti, which is one of the microfinance companies. And in fact, I worked with a company named Aries Technologies. We launched a product named Kashi. That was the first mobile lending app in India, in fact. So that was in 2006 we launched it. That's a completely straight through, in fact. Okay. Other than these, I worked with several other IT companies. Deloitte, I worked for a certain amount of time as a consultant, and a few other companies also in IT. In fact, one of the largest projects that I've done is LIC IPO, which was rolled out in India. The mother of all the IPOs, I spearheaded that project. So I'm happy to be a part of such a wonderful panel here, and I would love to share my experiences and any questions if you have further on that. Okay, thank you.
Good afternoon, everyone. Myself, Anne Mary George, Chief Financial Officer of Muthoot MCred, a gold loan NBFC based in Kerala, but having pan-India presence. And our 95% portfolio is gold loan, and we have around 7,000 crores of AUM right now.
Thank you. So as you can see, we have a reasonably diversified set of interests amongst the NBFCs over here. So you've got two of my eminent panel members representing home loans or housing loan, or that combo. One from the unsecured space, which is Rahul, and then of course gold loans. So when we talk of customer first culture or customer centricity, we were discussing just before coming over here as to how this definition actually is very different for different types of customers. In gold loans, it's all about speed and immediate sort of disbursement. Housing or LAP, on the other hand, is not so much about time or speed. It's about whether you can assess, you can be eligible for that loan, and typical times of 5, 7, 10, even 15 days is not uncommon. Gold loans, on the other hand, if you go beyond an hour, I was told it's actually 30 minutes, but in my personal experience, it's typically 45 minutes or so. But so that's a sort of range that we are talking about, just from a time perspective. Equally, there would be other aspects that we'll need to look at. Credit assessment, the review of the customer on various parameters, and so on and so forth. So one of our efforts will be to try and see how a common approach across various types of customers is relevant for what we do. Now, one last comment before I invite the fellow speakers. If you talk about generally banks versus NBFCs, now I'm making a very generic statement. So typically it's been said that the NBFCs have a wider reach, a more deeper reach. They can get across to places where typically banks don't go and don't want to go. Equally, the topic that we are discussing is around customer centricity. So in many ways, NBFCs are arguably customer centric, but let's anyway dive deeper into this to get some nuances. So in no particular, Rahul, maybe I'll start with you. And if you can just tell us, from a housing perspective, what does a truly customer centric financial institution look like, and how can your leadership ensure that customer first becomes a part of the organizational DNA? Now remember, customer first here is not, as I understand, is not just about time, but what are the kinds of things that you really are looking at? And after Rahul, if I could also ask Pungs to comment a little bit about that, please.
Sure, Sumit. In fact, you made one very interesting point. When we see a financing industry itself, you have a product-based companies. Now, if you see a gold, it is the velocity, the speed is required. The speed that is required is really high. Just about an hour you have. You just have to tackle the customer within that hour and close the deal, right? That's what you were making a point. Vis-a-vis the housing loan, when it comes to housing has a lot of complexity. So obviously, you need to engage the customer for a certain amount of period. And the competitors are sitting right next to you. They are trying to poach you. So this is where, the customer centricity or the customer first approach is very, very important. Otherwise, you lost him. It takes a split of a second to lose one customer, potential customer.
So Rahul, sorry to interrupt. What does that customer centricity mean? What are the kinds of behaviors that you think are relevant from the perspective of what you just described?
Sure, yeah. See, normally what happens, especially in the industry, in order to maintain the velocity, we use various different products, right? So this is product outward culture, what we have typically. All the companies have certain products where we actually onboard the customers and then do the rest of the steps on that. So which is a product outward culture, what we normally maintain. But actually speaking, these industries need customer centric. So we need to have an approach of customer inward approach, right? That's where the customer centricity comes into the focal point and becomes the nucleus of the entire overall ecosystem, basically.
Perfect.
Right?
Oh, thanks, Rahul. Punks, you want to add to that?
Ravi.
Oh, sorry, you're not done yet.
No, I said Ravi.
Oh, yeah, sorry. I keep calling. My apologies. So, guys, as you can see, I did say that I'll put my fellow speakers on the spot, and I'm already on the spot. So, thank you, Ravi.
No problem. Yeah. So, in my opinion, if you talk about customer first or customer centricity, see, it is beyond the mobile app or the helpline that you establish for the customers. See, it should be in the culture of the organization. See, it should start every decision that you make, be it the product design or to the collections. Every decision you make, I think there should be a question that you have to ask. What does this bring to the customer's financial life? What impact this will bring to customer's financial life? That question should linger in all your decisions. If it starts lingering in your decisions, then you will start seeing a change. Okay, basically I'll put it in 3 different perspectives. Okay, 1, the people, 2, the process, and 3, the technology. From people perspective, if you look at it, if you can educate your sales people or the frontliners to understand the customer context and serve the customer, it becomes a totally different ballgame. He is not just going to sell and then do the collections. For example, if the customer is now having some trouble, okay, then instead of escalating, he can advise the customer or recommend the customer on restructuring the loan with respect to the tenure or EMI, then it becomes a customer service, right? So you are educating your frontliners to think from that aspect rather than doing just the business of doing a selling and collections. That is on the people side. And if you come on to the process side, okay, so we, the organizations, we usually, what we do is, we wanted to simply go with our compliance or simply go with our convenience. So that should not be the case. So you have to work with the customer's convenience. For example, when you're talking about the document creation or document gathering, whatever it is, a simple example of giving a sanctioned document, if you can give that in the vernacular language, that will help the customer to understand what you're trying to say. You will be, you will also comply with the RBI's fair practice policy of saying whatever you are want to be transparent to the customer should also understand. And if at all you are talking about any mobile app, if this customer is not willing to use a mobile app or if he is not familiar with the mobile app, launching a mobile app will not help, will not solve the purpose. So you need to understand what customer needs and then you have to take that to their location. Don't expect the customer to come to your location. That is on the process side. Okay. And finally on the technology side, see whatever it takes to minimize the effort of lending or providing the loan to that customer, if you can do that, that is the customer first there. So meaning, for example, if the customer is coming for a top-up loan, getting the customer ID and you bring in all the relevant details and if you can disperse the loan in a day, that is the customer experience that he wanted to see. So similarly, there are a lot of use cases that you can go on. So on the technology side also, whenever you are deciding on some feature, some particular journey, you have to put customer upfront and then decide it. So with that, I think we will be able to do a sustainable growth in that particular domain. That's my point.
Oh, thank you. I think very well put, because when it comes to the experience of the customer or the expectation of the customer, it's important that you keep that angle in mind, because when I was starting Radian, and before this I used to run a microfinance company, I interviewed a lot of potential customers and customers of gold loans. So that's how we started. And one thing stood out is that you can have a very nifty app and very technologically advanced process, but the customer is really interested in the money. They are and money fast and in a reliable manner. So really, those are the important things. However much you can do on the various process improvement side, it's not probably as relevant from their perspective. Now, since we're talking about gold loans, Anne-Marie, if I could bring you in. Now, customers increasingly expect instant decisions, and particularly true for the line of business that you are in, which is gold loans. How can financial institutions redesign lending processes to reduce turnaround times without compromising on risk management? Because gold loans, I think risk is not so much around the credit risk, but the operational risk, whether the gold is good. And so what are the kinds of things that in your experience that you could see? And also generalize it for all of us, for unsecured loans, for housing loans, and so on.
Expectations right now are very big. They not only need an easy finance or timely finance, they need more transparency. They need to know what is there in the particular loan, whether it is gold loan or some other loan, what are the terms and conditions, how they can repay, how easily they can pay it off, all these conditions. So they need more, according to me, they need trust. So frontline employees are the face of all the organizations. So these frontline employees should be customer friendly, and they should be able to convince the customers and gain trust in them. Technology and all can increase the efficiency, but only people can create trust. So once trust is there, and they will be able to explain their needs to the employees or what managers who are sitting at the branches, and again the managers will be more able to focus to their needs and give a product which is more suitable to their requirement. We may have many products, but for us, we always train our employees to create a customer friendly relationship and to interact with them and to know what is their financial need, not only to sell a product, but what is their financial need. Then only we can improve the trust, and long-term customer relationship will be there. So all the papers will not work. So we have to be more customer friendly. We need to understand what is the requirement of a particular customer and how we can give them financial experience in a more friendly way.
Sure. Thanks a lot, Anne-Marie. I think point very well made. And Rahul, this time I'll call the correct Rahul. Rahul, let's talk a little bit about the hinterland of India. Small cities, tier 3, 4, 5 cities. If you see, the fintech and technology proliferation is started from large cities and very well concentrated in large cities. But when you talk of potential customers who are not either very tech savvy, and to the point that we made earlier, that they're not so bothered about technology, they really are looking at services. How can technology play a role, and what value can we try and bring in terms of our processes, and so that the average person in a small city starts to see the benefit of it, not just from a process efficiency perspective, but from a customer usage and experience perspective?
A great question, Sumit. I think going into the hinterland, and that's where rubber meets the road, because like you rightly said, metros and tier 1 and tier 2 cities are adequately, availing of the DPIs, the digital public infrastructures that are put in place. But villages and the towns and taluks and the block level is where India lives, is where is the deep end of the pool. And penetrating that market is something which, is the need of the hour. I mean, we all talk about financial inclusion. We think and praise a lot of hard effort that NGOs and microfinance institutions are putting around. But today, and this was an eye-opener for us, we always used to think there is not enough smartphone in the rural household. It has changed drastically. 80% of my customers are now interacting with me through WhatsApp. They are very happy to do that. And the pure point is technology does not differentiate. They don't have to be dependent. Everybody loves their privacy. We have 91% of my customers are women. And while they are very happy to interact in a group, but not all women always want to talk in a group. How do I give them access to multiple touch points? WhatsApp is a great way of doing it. We have call centers which are now powered by AI agents. And, so providing multiple touch points is another great way of connecting with our customers, winning their trust, showing them that their privacy matters. We don't want you to come to a branch and discuss in front of 10 other people sitting around you. You don't always have to be at a center meeting to be, telling us that, this month I will not be able to make a payment because my son is sick, or I have to divert my cash flows to pay someone's tuition fee. So the point is that the hinterland is evolving, and it is evolving fast. But at the same time, as technology penetrates our hinterland, the ask and the expectation of the customer is changing at a equal speed, if not faster. So the convenience that my metro user requires is now reaching the same level as a village user. And this is where NBFCs have to spend a lot of effort to catch up their systems, or adapt their systems, or transform their systems to be able to meet their expectation. And we have the duty to be ready. I'm just pointing out, with all the wonderful sponsors here who are out there, and some of them do help us, understand, navigate, or transform our organizations, in a beautiful way. So I know I've been going around in a round manner, but I think understanding my evolving customer in villages and rural India is super critical for the success going forward.
Absolutely, and I think that's where more and more of I shouldn't say unaddressed market, but certainly certain gaps which presently exist. Pungs, if I can come back to you again. You look after technology, but one thing I wanted to understand is how can financial institutions use automation and digitization to simplify onboarding? Onboarding is a very big word. Customer acquisition through multiple channels, especially given the diversity of the types of products, 3-4 that we've discussed just in our conversation. So what are the sorts of activities that we can build through technology, and again with the focus on customers' experience, to maintain a personalized experience and easier
Sure. I think this is the need of the hour. Typically, if you see, this particular domain operates in a phygital mode, okay? Something physical and something digital. And in the past, the way it used to be is the sales executive will go to the customer premise, he will collect the documents, he will come to the branch, then he will upload all the documents. Then he will realize then couple of documents he has missed, he will again go to the customer, he will then again pick those documents, come back again and then enter, and then finally find out that there is something missing in the documentation, or across the documents the name is different. So again he has to go get an affidavit. So this is like a to and fro things which were happening in the past. Okay, now how we have transformed this, at least in our organization, is, so we are now going with a assisted journey to the customer, okay, at customer place. We are not even asking the customer to come to our premises. We are going to the customer's place. This is an assisted journey wherein if they give a KYC ID, okay, I am not even asking my salesperson to know enter whatever data from the KYC ID because he is no prone to do some mistakes. Again, it will have some problem and then that will be found at a later stage. Again, you have to go back to the customer. So I'm removing all those hurdles. I'm just asking the KYC document to be OCR read. Okay, immediately I get all the data from of the customer. Then I do the bureau verification because I have the KYC ID. I do the bureau verification. Then and there I cross check your PAN card or Aadhaar card and then come back and tell you there is some problem, you have to get me an affidavit for it. And then I also do a risk classification because I have the cash flow analysis. Now there are a lot of fintech integrations which are possible, like an account aggregator wherein you can pull in the lifestyle characteristics of the customer, the behavior characteristics of the customer, the cash flow analysis, in fact your savings trend, your expense trend. So everything is available. Now with all those data, what I can do is I can immediately, instantly offer my customer all possible, whatever is eligible for the customer on the actual cash flow analysis. I can do it and can tell on the ground, okay, this is something possible, these are different possible offers I have, and this is something which is very close to you because of all these necessities that you have. So, and I recommend the product to the customer. So all this has tremendously reduced my turnaround time today. So whatever was taking around 4 or 5 days earlier, the just onboarding stuff, till the credit decisioning, I'm able to do in couple of hours, okay, on a positive side of it. Even on the worst case, it is just a matter of a day. So it has drastically come down. So there are a lot of scopes.
No, thanks for that. And if I could now ask Anne-Marie, in gold loans, the role of technology, if I may say, is limited to the extent that you have to have a physical handshake, you have to assess the gold, and the expectation is around time from a customer's perspective for the most part, and of course the loan to value ratio and so on. But where do you see technology helping, again from the lens of the customer? How does it actually help them? And where I'm going with this is, so far we've been talking about assessment of the customer and how technology plays a role. What about the service for the customer during the loan? Where does that come in? And that's why I thought I'd come to you, because gold has a role to play. Obviously all the others, but gold probably has more pronounced. So if you can just shed some light on it. And after that, I'll also ask Rahul to comment, because you also do some gold loans, right?
Yeah, as far as gold loan is concerned, initially the customer has come to the branch and there has to be a physical documentation. But earlier, if he has to pay the interest or part payment has to be done, he has to come to the branch. But once this technology has evolved and mobile app has been activated, the customers can pay the interest at their ease, even after their office hours. They need not come to the branch. Only they need to come to the branch for closing the gold loan and taking the gold away. So that way the technology has helped the customers, because many of our customers are traders or businessmen or salaried employees. They have to take a leave when they want to pay the interest. But right now it is not necessary. They can pay the interest or part payment, or they can top up the loan using the mobile app. That way technology has helped gold loan a lot. Even though physical presence is required, the digitalization has helped a lot.
Sure. Rahul, you want to add?
Sure. I mean, I think the elephant in the room is always the regulator. And we can't keep the regulator out of the gold loan business as well, including a lot of other things. I mean, recently RBI has given out guidelines where they're putting checks and balances and risk management, in terms of 2.5 lakhs and above kind of a threshold. You have to do a credit assessment. Earlier, we used to give out loans on basis of the quality of the gold, but now it's not just the quality of the gold, but the quality of the customers. They're saying you cannot just keep renewing the gold loan perpetually. The customer has to actually pay it off. So the regulator is putting checks and balances in place, and those checks and balances in place is transforming the gold loan as a product in itself. And that's where technology and innovation in business model is thriving. We were having this discussion, right, about how there are now startups which are helping gold loan borrowers to basically renew their gold loan seamlessly without feeling the pinch of getting arranging for the liquidity to pay off the previous loan and then renewing the loan. So I think both technology as well as the business model innovation has a very crucial role to play here. And India, while we are criticized that we are not doing any foundational model or very deep tech innovation, but I think we are doing a tremendous and amazing job of business model innovation when it comes to financial services and fintech space. So overall, net, the customer is the winner due to the innovation that comes in because of the growing competition that is out there, and again, by the virtue of customer centricity of the organization or by the virtue of customer centricity brought in by the regulator and the overall innovation and technological advancement that we are seeing, customer is winning. That's the bottom line.
Brilliant. I think the entire innovation is moving in the direction, as you said, Rahul, to try and help customer, and we've seen various examples of that. The regulators pushing us in that direction. The innovation ultimately have a way of easing the process, reducing the friction, and not just for the organization and the employee, but also more importantly for the customer, which is what we are essentially talking about. Now let's switch more about the internal processes and controls. Now I'll talk about in our organization. Only last week or the week before that, we were having some discussion about the various insurance products that we offer, which many a times are bundled as part of this. And the conversation went on and on, but the crux of it was at some point in time I put my foot down and said we can't really charge the customer more simply because it makes life easy for us or the insurance company is asking for us to do that. Now that's goes counter to the revenue generation principle, because obviously that's what we are ultimately in the business for. But the point I'm making is in our own subtle way, we were trying to say that ultimately customers' interests are paramount and we can't start compromising on that because it helps us in some way or the other. So maybe, Ravi, I could ask you to talk a little bit about what sort of internal processes that you would have seen that work, incentives, disincentives for the people, for ensuring that we ultimately are serving the customer first and foremost. Obviously, organization objectives, mission, all the businesses are ultimately there to make some money and so on. But how do you balance that, and what are the levers or gears that you can press for this?
Yeah, that's an interesting one actually. Now, out of all different types of loans that we have, I'll pick housing here again. The reason being, this one type of a loan which takes slightly longer than as compared to any other type of a loan that gets processed and disbursed basically. And then after service is also for a very longer period that is required. So I think any comments on this would really help for all others as well. Now, I started my note with the shift that is required from the product outward to customer inward. Now, this is something which needs to be reflecting in all levels. When I say in all levels, at all the hierarchy levels. When it starts from the boardroom with the senior management till the frontline employee. I'll tell you a simple example. Majority of the companies would have a scorecard. Now, which starts with a lead generation to the disbursement to all different employees, right? Probably the person who is holding the product or the customer support, they will have some kind of KPIs or on that metrics basically to evaluate on the customer, right? Now this is where is a disconnect is what I see. Actually this customerism or anything related to the customer should get into each and everybody in the organization, right? As a part of the KPI or as a part of the deliverable, whatever it is. Until or unless it is there, it becomes too difficult. Now I'll tell you the reason why it is. Typically what happens is, now any product that we are trying to sell or anything that, any financing that we are trying to do, the fact is something, and the reality is something, and what goes on the ground is something else. The customer, what he understands will be completely different. There are three different phases that there are there in the starting to the ending until the money gets dispersed to the customer. Now, Poons made one very interesting comment that giving in vernacular documents to the customer. So today, semi-urban market or tier 2, tier 3, it's very difficult for them to go through a document of English or pages and pages to understand anything in that, So, these things really help. To start with, I'll tell you, there is an adoption that we have done. Anytime a customer touch point starts, from there itself we start sending communication to him until the disbursement. So every stage he is kept informed. For a loan to get processed, obviously you have a lot of stages. In housing, you have slightly higher. You will have a lead stage and then onboarding stage, and then you have several different legal, technical, RCU, and then whatnot, credit, sanction, lots of stages you will have. The conscious decision that we have taken is, let's keep him posted at every level. So we send an SMS and a WhatsApp and an email to the customer mentioning him, hey look, you have reached out to us for loan, for so and so type of a loan, and at this particular stage it is completed and it has moved to the next level now. If you have any doubt, please do contact so and so person or call center. This gives so much of clarity to the person on what is happening. See, anybody who is again getting onboarded is not getting onboarded just like that. Right after that, you will collect some money also for him. So you are liable until the disbursement. Whether it happens or not, it is from your side, it is very important for you to keep them posted as what is happening. So that customer can always come back to you, hey, look, I was expecting this, but this is what is happening. So you're trying to equate that reality versus whatever is happening on the ground actually, right? So the effort should be towards that. Now, vernacular is a bigger thing. People understand it. Similarly, even we have, hearing impaired people also. So what we do is normally we send a message to them saying that, hey, look, we have sent you the document. Now you can put a voice on that and read through the entire document. Now whether do it or not, it is all, but you are giving them an option to do it. You are giving the clarity to them, right? So, yeah. So, each and every area. Now, even if there is any, normally what happens is if there is a bounce, there are certain charges that happens. Every company sends an EMI reminder, right? But I've hardly seen any company sending EMI reminder. Also has the information of, in case if it bounces, you will be levied so and so charges. Very rare companies does that. Companies do send an EMI reminder, but they don't send this. Now, is there any advantage that they get by sending this? Yes, they do, because the customer becomes even more aware of that. He doesn't know actually how much will he be paying for it, right? And even on the insurance charges you are mentioning, the loading that it happens, obviously, it's a top line for the companies. And it adds certain bottom line also in a big way on the insurance charges. But yeah, it's a product. It's a cross sell that is happening. But how much you can keep it limited? There is no regulation, of course, but it's up to the conscience of a person. Sumit, you are a founder, so you know very well about that, right? How much you can keep it. Now, whether it should contribute to you for certain activities of yours internally, or to what extent you want to do it. If you do a quick math on it and limit it, customer will be benefited in a big way actually. Now you just send an SMS to him saying that, hey, look, you have opted for these insurances and this is what is the charge for each one of them. That's good enough for him to realize, oh, I'm paying X money, but then actually it is so much. So I'm getting benefited so much actually.
Absolutely.
Right? Yeah. So yeah, there are many like this which can happen, and definitely bringing in the KPI of customer satisfaction, NPS, or the resolutions that are happening for all the calls that we are getting, how fast that they are getting resolved, not just to the team that it is handling, but it should also roll up to the respective branch and to the respective people, whoever have handled that case, then it will bring in more value to it actually.
Sure.
Yeah.
No, thanks for that. One
Just want to add, as
Okay.
a chief product officer,
Yeah.
a lot of my KRA has a weightage of maintaining NPS or even improving the NPS and CSAT score. So yeah, that's a great way of basically ensuring the customer is there in the boardroom, in the management room.
Well, that's a fairly concrete example of it, because most of the other examples are more around process that we've talked about so far in our conversation. But what I would really love to hear is, hey, I rewarded this employee even though my revenue went down, but the customer was happy. I think we have relatively rare examples of that so far, and that's something that we possibly need to be doing. I'm conscious of time. I think where are we? We are still okay for maybe just 2 or 3 more questions. Anne-Marie, if you could just tell me a bit about what role do frontline employees play in shaping customer trust and loyalty? I know Muthoot is a big name, so trust comes automatically, especially with something as emotionally charged as gold for most of us Indians. So obviously, when they leave that, trust is a big factor. But from an employee perspective, what are the sorts of things that you encourage them to do? And I'm conscious of time, so now we'll keep our answers relatively short, if it's all right.
Yeah, frontline employees are actually the face of the organization. They are the persons who are dealing with the customers. As far as gold is concerned, there is a very huge sensitivity in that, because no one needs to give up their loan. But they have come for a gold loan because they need easy money, emergency money, and they can get it fast from an NBFC. So in our organization, we always train our employees to be customer friendly and to ensure that the trust is the most valuable asset for our organization. Once we lose the trust, business will not happen. Even if there is low interest schemes or anything like that, it will not happen.
So what do you expect the frontline employee to do to demonstrate that trust or
Yeah.
win that trust?
We usually take only local managers. So they will be very familiar with the faces coming there for a gold loan. And they want them to be very friendly and like a family, because they need to understand their emergency and give a pure guidance for them, because they won't be knowing which scheme I have to take. So we will train the employees that you should interact with the customers and know what they need, whether they need a small loan of 3 months or whether they need a more 6 months loan, and what is the need and how we can help them to improve their financial stability. Because we usually deal with very small ticket size loans. Our average ticket size is around 60,000 or 70,000. So that type of customers, they come to us for an emergency. So we train our employees that the customer is our blood and butter. So we have to treat them as king. And trust is the most important thing.
To add to whatever she was saying, see, the trust builds through transparency. Okay, when you are transparent, automatically the trust will be built. How can you be transparent? What kind of things are expected by the customer? One, when will I get this loan amount? Is the first question that will be lingering in their mind. And what is the current status of my application? I'm talking from the home loan perspective, okay, not from the gold loan perspective, which they want it immediately. So what is my current status of the application? and what will be my rate of interest, why I am charged this rate of interest. If you are very transparent through your technology, process, and people, you will earn the trust of the customer.
To add on this, as far as gold is concerned, they will be very conscious by how our gold is being kept. So we train our employees to explain how their gold is being kept, how secure is it. We have taken insurance for that. No need to worry for that. You can pay interest or you can repay it as when you need not wait for the due date. You can pay it as and when you get the money. As and when you have money, you can pay. You need not wait for the entire loan period. So the entire process, how it is being packed, how it is being kept in the strong room, how we can take an insurance for that, all these are explained in detail in local language to them. That we are training in the employees.
Okay, I think we are pretty much at the end of our allocated time. So one last question, and Ravi, if you could step in over here. We talk a little bit about AI on a number of occasions, and maybe if you could say a bit about how that can help shape a better customer experience. Now, I'll take my example. When I get an automated call and I can see that it's a robo speaking, it puts me off. So it's not a great customer experience, but it's great efficiency from a company's perspective. So how do you balance this? And similarly, the other day I got a call from whichever bank it was, I won't name it, where it was a robo asking me for feedback on the recent interaction with someone. And maybe it's me, but it really wasn't doing anything for me, for the customer. It's very efficient for the company, but how do you balance that?
Yeah, I think you actually stole a couple of my words already, It's true, actually, when the call centers started adopting, the first point I'm talking about, started adopting AI chatbots or AI bots, I would say, not even chatbots, just the bots alone. They saw a, huge peak of getting returns on that. There was no doubt about it. Now then eventually what has happened is people started, the moment they hear that it is a machine which is calling, no matter what it is about, they just don't listen to it. It may be some kind of an offer that it is coming to him. It may be some kind of an incentive that it is coming to him. I would say, let me not generalize it completely, but yes, majority, they'll be hesitant to continue that call, right? Yeah, this is definitely there. In fact, collections was one of the department which has gained tremendous when they actually implemented voice call system, but then eventually nosedived. I don't know, maybe some companies even still taking an advantage of that. I'm not really sure about it. I totally agree with you what you said. Yeah, so, there are certainly some areas where we can use AI tremendously. Of course, in terms of the data validations, in terms of the analytics that it comes out of the system, in terms of the details, whatever we are capturing, the pictures for a matter, whether they are correctly there or not. Initially, we in fact applied it on the KYCs, but of course, nowadays we don't take KYCs anymore. It's extinct now. But, we take the pictures of the house or the property basically. Now, if you directly take it, I really don't know where is it. But then if you actually add the coordinates to it, in terms of the lat line to it, then I know exactly, okay, this is an authentic picture. Otherwise, anybody can take any picture and claim that, okay, I'm taking a loan. He takes a building in Mysore and claims it that I'm building it in, Chennai, ask for that money. But not anymore now. So whenever we are taking those pictures, we actually tag it with the land lat.
And liveness check and all those things.
Yes, all those are also there. even the customers also, your live list check, all those are there. Majority, I think, internally we are using more for internal employees. Gone are the days where we send leaderboards to them, or some statistics.
Sorry to
to
interrupt
them.
you, but in some ways you are agreeing that so far AI has not been able to help
No, I'm
in
not
this
saying-
example for the customer experience. I'm talking customer, I'm not talking
Yeah,
efficiency.
yeah. When we introduced it, it did actually.
Okay.
There was, statistics going toward the north, but what has happened is people started realizing it. Then we saw a curve slowly coming down.
Okay.
That's what I'm saying.
Rahul,
So-
one last, did say last question, but sorry, if I could just ask you to elaborate a little bit from your experience, as somebody who looks after products and designs that, I'm sure AI is coming into your syllabus, if I may use that word. So how is it working again from the perspective of you're in unsecured loans for the customer experience? What does AI do?
So two use cases that we've implemented. One, you just pointed out, we are now doing outbound calls using AI. Contactability ratios are stable. We have increased our collections through digital medium because now we've trained the AI model to even guide a customer and navigate through PhonePe, Google Pay, all different kind of BHIM apps to collect from the OD customer. So that's something which is flying really well for us.
Cool.
And two that we have implemented right now is something a chatbot called Dost, where my wealth manager, as we call them, is able to ask Dost, will this loan get into some kind of a deviation? What do I need to do? So
Predictive analytics. In some ways.
absolutely. On the fly, you don't need to speak with a credit manager. Just ask the question, and they will, the Dost will basically guide you through this. So this is something which is already out there. But then we are also creating pillars of our AI center of excellence, whether it is in finance, whether it is in processes. We are bringing in AI, agentic AI, to do triangulation between different kind of KYCs, where a voter ID can have a different, whether it is Rahul Tripathi, some of it will have Rahul T, your bank returns a different name, and all of that happens. So how do I take the human out of the loop and give a AI agent to basically triangulate and find the right KYC? So all these kind of use cases are there.
Thank you, Rahul. We will end with a 30-second blurb from each one of you on no more than 30 seconds. I'll time you, on what we should be doing in the immediate future. And again, remember, we are talking about customer experience, not efficiency. Rahul, since you have the mic, we'll start with you.
So I think always ask the question, who is this solving the problem for? So my solution has to start from there, and that will basically waterfall or cascade all of your solutions in the right place, in the right manner. That's it. I always do that.
Brilliant.
My suggestion is use AI to bring personalization to customer. Okay, somewhere you have to bring in that benefit to customer. So that is an area that we can explore.
Thank you.
Yeah, bring in such processes which will help people, in turn helps the customer. The continuity has to be built among these without any breakage. So as long as this is intact, then you can take the help of automation, products, APIs, all those, to empower these continuity basically. Yeah.
Thank you.
Yeah, according to me, we should enable the customers or assist the customers to use these digital tools, especially in rural and semi-rural areas. Our employees should be trained to assist them and make them use these digital tools, whichever we are using, whichever you are mobile app or whatever we are using, assist them and train them to use. Because end of the day, all has to be tech savvy. Otherwise, speed won't come. So,
excellent. So, folks, there you have it. We have had a lot of insights and inputs based on knowledge, experience, personal anecdotes that have worked or not. And I think it provides a reasonable overview on the kinds of things that are working or perhaps not working, and more importantly, what are the directions that we should take. So we will end with that, but I guess if there is a question or two, we are happy to take that. Yes, there's a hand at the back, please.
Thank you, everyone. So I'm Prateek. I represent Dial Nexa Voice AI. So wonderful thoughts, ma'am. You said about customer experience being the priority. Sir, you shared your thoughts about Voice AI still not delivering value to the extent where it has to. I have a slightly different view on some of these points. Of course, customer experience, I agree. I have seen Voice AI deliver value to a point where customers talk for an hour with AI, 50 minutes, 60 minutes. So that makes me also wonder. In fact, one of the most heavily asked questions, one of the most asked questions that I have to answer is that when people talk to AI, when they realize that it's an AI, they will immediately hang up. Why will they talk to an AI? So that makes me wonder why people hate AI, why people think that, this is an AI, this is a robot talking, I don't want to talk to them. Because for decades, we have seen AI or robot or tech to be stupider than humans. Right?
No, I think that's a great point. And there have been numerous instances and examples in the press about how people become not just engaged or encouraged by it, but almost obsessed with discussions and so on. Obviously, that's a different issue. I don't think maybe I'm the guilty party over here when I said that creates an issue. Maybe the kind of engagement that is needed through the AI,
Right.
at least in the examples that I was quoting, I have not seen.
No. I don't mean to offend you.
And that's no. The issue is not about whether it's working or not. I think there's a clear mandate that AI is working. It's winning big time.
Right.
The point was more around the specific use case, and that's where I think we need to figure
Correct.
out that does the customer, at least the point that I was making. I'm quite happy to see if anybody else has to comment. I shouldn't be the one answering anyway.
So
No, I think absolutely right. Don't bring a knife for a gunfight. I mean, his use case was absolutely spot on. This does
Right.
not require AI. I don't want it to be, but at the same time, hanging up has become easier. I don't feel guilty about hanging up on someone. Like
Right.
I can just slam my phone and not feel bad about it because I know that that person would not mind.
So all I was trying to say was that for years we have all witnessed tech to be stupider than humans, and I think we are now witnessing a wave in AI where we are seeing this change gradually. So that adoption will come with time, and you're all right that I have myself hung up on bad AI calls. Even though I run the voice AI company, I still hang up on AI calls when I don't see that efficiency. But I think with a little bit more time, with a little bit more polishing iterations, we will get there soon.
That's precisely the point I was making. Yeah, exactly.
Thank you.
Yeah, otherwise there would not be companies which are making, which are consuming millions of minutes in a month.
Correct.
Yeah, obviously, that will not happen.
Right. Thank you.
Thank you. Any other one last question? Yes, please.
Hi. Hi, I'm Satvik and I'm from WordWorks AI. So my question in terms of general also, it would be, see, we are talking about AI and being the buzzword at everywhere, whether it be voice or whether it could be any channel itself. But what is the one thing that is more important is the sovereignty of it. So I wanted to understand from your standpoint, since you all of you have been into the system for a long time, standpoint of time. Now with AI coming into the, what is the sovereignty role that is being played here? Because a lot of the models there are still, we are still using from outside of the system itself. Not necessarily being into there, and data still going outside of, cross border and all those factors that come into the picture. So that's where my question comes up.
I'll defer to the technology.
I just want to bring in a customer viewpoint on this. We are happy to give away everything to Facebook, everything to Google, and then we are asking why are we sharing data with Anthropics and the Google Geminis of the world. I I think we got to get way beyond that. What matters here is that technology will pervade, it will transcend all borders. And if something good can come out of it, let it happen. Let's put the guardrails when, the kids actually start hurting themselves.
See, it is not that there are no guardrails. There are strict guardrails which are there. See, everywhere we wanted to have human in the loop. We don't want AI to take away everything and then do autonomously without the control of the human. It is not there. Everywhere the human is also there in the loop, and we want everything to be auditable. That is very, very important. And everywhere we wanted it to be explainable. So wherever we are saying, even it is a generative AI, we wanted to understand what is the reason behind it. So all those guardrails are still coming in place. I understand today there is a kind of uncomfortness on that aspect, but slowly it will get set right.
Yeah, I think even the data that is kind of getting consumed while you're trying to use any of the AI or the LLMs that you're talking about. Now, you take any product today, they're not prepared on one LLM. They are all prepared with multiple LLMs behind, number one. And there is a huge customization that is made against all these LLMs, okay? Now, as a technology person, it is your due diligence to what extent that you're doing. At the customization level, to what extent are you holding that data within the controlled perimeter, and what is that it is going out, right? So yes, it's a good question what you asked, but then it's as a technology leader, he has to get involved, he has to find out what are the LLMs, what is the customization, where is the data flowing, to what extent it is contained, and to what extent, within the perimeter, what data is moving out. That all has to be done, a little bit of in discussion with the people. Now, will it still contain? No, you can't really say that, okay? But yes, you have to do the due diligence to safeguard your data.
Okay, I think before I get more dirty looks, we will end the panel. Thank you, everyone. My personal thanks to all the 4 eminent panel members. Thank you all.
The speakers of this panel discussion will be Krishnaswamy V, CTO, Aptus Value Housing Finance India, to please join on the stage. Let's give a huge round of applause. Mr. Vinod Kumar, Chief Digital Officer, Shriram Finance Limited, to please join. Up next, I also request Vijay Balasubramanian, Head of Technology, Samunati Financial Intermediation and Services, to please join. Can we all give them a huge round of applause? The key points of this panel discussion will be AI-led credit decisioning and underwriting, automation across the lending life cycle, hyper-personalized customer engagement using AI, AI-driven risk, fraud and compliance management, building scalable and responsible AI infrastructure for NBFCs. I request Mr. M.S. Balakrishna sir to take over the session. Thank you.
Thank you, Hadid. Good afternoon, all. Still hangover from the food, please, no response. I think the first session was LA. I at least would need some response. Say yes, hi, good afternoon. That's loud enough, thank you. So, this afternoon we have three eminent panelists with me, Krishna Swami, Vinod and Vijay Balasubramaniam, all technology people from the financial industry. So, the topic given to me is, how are we looking at the next 5 years roadmap for NBFCs and microfinance, and how will we be utilizing the AI from the perspective of digitalization, and what would be the roadmap for it. So I would start off with the CDO, Mr. Vinod Kumar, to look at, in today's scenario, if you look at it, last 10 years, NBFC and microfinance have slowly moved from the non-digital to digital mode. So a lot of digitization has come into picture. So in the next 5 years is very crucial for us to look at how the microfinance and the NBFCs are going to adopt AI to look at how efficiency can be brought about in all these specific areas what has been mentioned. Now, there is a discomfort in all the people or the world around at this point in time saying, can you completely hand over everything to AI? Or what are the guardrails that needs to be? Some of them are saying the guardrails are there. Some of them are saying we are still utilizing AI. So there are two parts to it. One, from a development perspective. Two, from a usage perspective, from an end user perspective. Now, when you talk about it, there are multiple risks and things that comes into picture. So having said that, how do we operationalize this inclusion of AI? So when I say inclusion of AI, I want to give a specific example, right? In today's scenario, if you look at it, whenever you want to implement something, right? I'll take two examples here, then I'll come back to you. You have a motorcycle with you, right? When somebody wants to repair a motorcycle, you shut down the machine, you completely dismantle and replace it with another equipment or part, whatever that comes in, then it starts functioning again to full-fledged. It could be additional power, empowerment coming into picture. But the same is not the case when you are doing an operation on a human individual, because the human is live. You are trying to, say, assume that you are trying to put a stent into the heart. You are trying to introduce or induce something into the setup, where the setup has to acknowledge it, run it, and then start moving into the system. So that is where we are in terms of, at this point in time, incorporating AI into the setup. So having said this, as a CDO, what is it that you envisage in the next 5 years? How do we bring up this AI so that it can be completely adaptable to the microfinance and NBFC?
Okay, so randomly you chose the right person for that question. So I'll tell you why. See, I'm not sure, I'm assuming a lot of you know Shriram Finance. We are a 50-year-old organization and started off operations from the hinterlands of the country and slowly grew up, and now we are one of the largest NBFCs, typically between the commercial and retail segment. I mentioned hinterland because the reason is for the last 50 years we've been a very, very physical company. One, it was by chance, the other by choice. Chance because we started off in the villages and it was about developing relationship rather than looking at bureau scores or documentations, things like that. By choice because it was built on the structure because we started off with commercial vehicles and it is a very field intensive kind of product, right? It cannot be done digitally. The so-called digital framework may not apply to a segment like a second-hand truck, right? The assessment, the valuation, everything has to be done physically.
True.
So the entire insurance piece, the chits, everything was core developed at the hinterlands, the villages of the country. So physical remained so. Everything remained on paper for the last 50 years. You mentioned 10, and I'm just taking 50 as an example because it took us 50 years to get to the point where the eventual transformation, the digital transformation that everybody speaks about these days, have just kick-started, right? So
True.
I actually am at the cusp of that transformation, and one of the responsibility for me is to transform that physical into digital. So probably I'm in the middle. I call it phygital because there is nothing which can immediately jump from paper to network, right? It has to pass through,
I
the
think
desktop became a laptop, and then it has become a handheld device for you. It cannot jump. Sorry, you wanted to-
Fidgetman, when you said digital, I recollect Poons from the previous, also saying it's partly
mentioned.
digital yet.
So I think some of the organizations who've got legacy behind them have to pass through that stage. We cannot jump the gun. And I understand new age fintech. Some of you are here who've probably started off in the internet generation, and you can start off calling everything digital. But unfortunately, we've come a long way till here, and we have to pass through the digital generation. And that is where now everything comes into play. Now coming back to the question, where do we stand, and how do we go about the next 5 years, right? So when I said physical, physical does not really gather the kind of information that I require to move forward, right? So everyone speaks about AI, and everybody says this can do wonders and all, but AI can do wonders only as it is. It's a derivative of how strong your data is, right? If your data is not strong, no matter what model you build, it is going to fail. There is no questions around it. So we've spent the last few years to get the data set right, tabulating it, enriching it, figuring out how many parameters do I have to have, what should be my future data set should look like, and eventually we are probably at that juncture where I can call it we are reasonably at a spot where we can call it it's good to go, right? So right now we have started building models. Yes, POCs are being run across the entire customer life cycle. I mean, I think the earlier panel members also spoke about right from the marketing, from onboarding to validation, from underwriting, the fraud risk management, collection, service, everything. I can go about telling you each use cases there also. But I think we're just doing POCs. I mean, we are just frankly, we didn't want to be part of the race to be the first in the AI adoption, right? We wanted to be safe than sorry. So we just wanted to be at, we didn't want to jump the gun. And
I like that statement. The reason why I'm saying is everybody is in the rush to say AI, we are all part of AI. But the consequences of implementing it without knowing what it is going to provide you is something which people are still unaware. So that is where my question is, since you are all part of the leading setup, what is it that you want to look at? See, right now, if I look at the whole setup, the ecosystem of NBFC or microfinance, your workflows are predominantly the same. Let it be any organization, majority of the workflows remain the same, except probably maybe within the organizations, the workflows may be a minor deviation here and there. But predominantly entire workflow end to end, starting from onboarding to the execution till the collections, majority remains the same. So question is, if in the next 5 years we have to start building this up, so are we going to look at a framework that will bring up in terms of how you want to say club or mix your current information technology that you have, which is already existing, with a lot of regulatory features that comes into picture, and then how you want to start injecting this AI so that it can be efficiently used. So after you give an answer to this, I would want to pass it to Krishnaswamy.
Okay, so quickly, I think whatever we are building, there are 3 pillars to it, right? So one is obviously privacy. I mean, DPDP is around, and nothing goes. You cannot beat around the bush. That is the biggest demon you have to face, and you cannot go around it or jump over it or break through it, right? So that is something that we wanted to be right at, when we started off doing anything around AI. So we took care of, I think consent is one part of it. And secondly, even while testing models, right, it was never about testing models on real-time, real-world data. We wanted to do it on synthetic data, which is something that mimics your existing without any PA on it. So that way we are not touching on any sensitive information that somebody it might bother someone. Secondly, I mean, the fairness part of it, right? The new age terminologies these days, they call flips and drifts and bias. So, you need the right audits to ensure that these do not happen. Because one drift or one bias because of a demographic detail can immediately shift your outcome or result towards the other side. So that we have the right set of audits, to take care of it. And obviously, I mean, XAI, right? Explainable AI. You cannot, if there is no black box around it, right? So unless and until the outcome can be explained through an audit trail, then you are failing right at the beginning. And eventually, the last part is obviously trust, right? The entire zero trust architecture will survive only if you build keeping that in the middle. And one thing that I'll speak for myself, while it's a common terminology, but no matter what, I don't think it works without human in loop. So I think that I'll leave that with that thought around. I mean, no, I'll probably never build a STP. There'll always be a person to validate, evaluate, and finally give a green signal on it.
That was very, very major, useful insight, Vinod. Now I'll pass on the baton to Krishnaswamy. From a technology perspective, right? Now he is talking more from the data generation perspective. So from a technology perspective, I want to look at what are the current gaps that you foresee from a governance, risk and compliance layer where your auditors are there, your legal set of team are there, and how this part of AI is getting to be translated, because unless the legal terminologies are completely translated where you can go back to an audit trail perspective, what are the checks and balances we need to look at to ensure that this next 5 years roadmap can inclusively be taken care in terms of AI?
So it's a good question. See, the first thing you need to start with any roadmap is, I would like to ask is basically, anyone should have first a policy for AI. Okay, first have a policy for AI, then define the usage policy, then define how the data which is going to be used by the AI, whether you are using external data, whether you are going to use the internal data within your system, or you want the machine to learn from your own data and give results to you, or if the data you are getting it from outside, is it a data which is taken with consent and there are no issues? So these policy definitions of AI and enterprise-wide, how the usage policy of AI, who can use it, who should be using it, who should be approving the models, how it is done. That has to be defined actually. And what recommendations AI can give, and who is the person or the responsible risk management or the credit or even the customer onboarding or the lead qualification in any part of the implementation. I would say who is the human who is going to approve it.
Right.
So this is a very mandatory thing. Start first with AI policy, then develop procedures for that, and then go ahead about implementing it and keep revisiting. The first time when we make a policy, we have now made a policy for Aptus actually. I would say actually, maybe it is 20% only is right. We are all in the first steps. Okay, let us not worry about it, but let us start it. And start with an AI policy, then write the procedures, then usage policy. How we are going to govern it makes sense actually.
Got it. So I will pass on the baton to Vijay Balasubramaniam. Now, Krishnaswamy has talked about the policy related to AI. Given the current scenario, all of us are using Microsoft Edge. Copilot is a part of it. Some of the organizations have let the shadow AI like your chatbot, ChatGPT and other things into the setup where data exfiltration is already in place. So in such a scenario, how do you want to bring in a governance which will start stitching towards the roadmap, which will enable us to take the right decision in terms of moving forward with what sort of an AI can be implemented related to the specific workflows of microfinance and NBFC?
Right. I think that's a great question. I'm Vijay. I represent Samanati Agro. We are the largest agri-value chain player in India. We do both lending and marketplaces. I'll bring some context on the primarily on the agri sector as well as the agri-related sectors like MSME, whatever caters through to it. And probably I'll address your question first. See, as things stand, engineering teams and QA teams have already started using Copilot, Claude, and we've seen a lot of, I'll say, a lot of TAT differences. For example, something like an integration between two entities. If you take a co-lending partnership or a BC partnership, or for that matter, even a DSA kind of partnership, just the integration part, not the overall engagement part, right? Just the integration part used to take weeks. Now we are seeing that it is being cut down by almost 80%. Because we are able to see that once we understand the touch points, intersection points, how quickly can we address it is what we're looking at. So when we see results, that's where we learn from, right? And we had to experiment before we could arrive at, okay, yeah, we are seeing some results here. And here is an area where I could bring in AI without a lot of impact or without a lot of, without rocking the boat, to put it short. So when we talk about how we start adopting AI into our technology layer, into our day-to-day, yes, there are, again, I would go with what Vinod was trying to say, and of course what Krishnaswamy sir was also trying to say, right? Which is that existing governance layers are there for a reason, right? And wherever it is, like whether we are onboarding tools, right from the time when we evaluate a vendor and onboard a tool, same logic applies for something like Claude or Copilot or any other AI tool that we have. And in terms of how data is being shared as well, it has to come from as a policy, right? Exactly that we have a policy in place. Once we have the basics sorted, where we start using AI on a day-to-day basis, then we go into the power users, people like engineering, people like product, QA, anyone from, like for example, compliance. So in case they start using AI, that's where we see maybe the low pickings or the low-hanging fruits. That's where we can probably start. And 5 years is a very good timeline. I'm happy that you're looking well into the future, right? When we start, again, we are talking about the data part. Again, Vinod covered it pretty much comprehensively. Only after we have a level of data sanity and the structuring of data, we can actually meaningfully utilize AI as part of our lending cycles or as part of our trade cycles, for that matter. So I think the short answer there is we start with where we see minimum impact, where we can have power users, people who can actually understand the impact of it, people where there's already a very clear review mechanism in place. To give you an example, every code that is being written by a developer is being reviewed by an engineering manager or an engineering. So there is already a very seamless process in place. There are bots set up at every level for us to see whether the code is being written properly, whether it is being evaluated, QA checks are being run regularly. I think that's where we can start with. Once we have the power users understand how it works, then we extrapolate that as part of our product. Can we use AI to orchestrate data? Can we use AI to push data from an internal system to an external system? Receive it, validate it, transform it. I think that's how we will progressively move on. I hope that answered your question.
Thank you, Vijay. So from a perspective of orchestration and other aspect what you spoke about, what I want to bring about in the next part is, what are the risks that you can look at in the next 5 years when you're trying to employ this, right? Now, every microfinance or NBFC has multiple use cases. Some of them are, tending to gold loans. Some of them are into personal loans. Some of them are into different kind of loans. But each of these different loans have a different kind of documentation or verification or validation to be done, which means the kind of documentation that comes into picture, there's a validation, a second round of validation that needs to be looked at. So how much of AI will be employed into it? What kind of risks are available where you can mitigate them over a period of next 5 years? Probably I'll ask you the first and pass on to both Vinod and Krishnaswamy.
Sure. So the risks, I would argue that the risks that we have in AI have already been in place. I mean, there are no additional risks that we are encountering. At least that's my personal view. So again, we go back to an old school kind of an approach where we have a very clear risk evaluation framework. There are risk teams, again, compliance teams for a reason. We start from the basics there again.
So, sorry, yeah. I'm talking about the risk from the AI perspective.
Sure, okay. So if you are looking at how a traditional implementation currently works, right? See, again, we go through some, let's say I'm building a product, again, from a technology angle, I'm building a product that will cater to something like a business correspondence relationship. So I have my own LOS. I want to build an additional layer that will integrate with an external player. Now, in this kind of a situation, how did it happen before AI? We were developing it end to end. We had a QA process, we had a stakeholder UAT process, and then we used to take it to life. So similar to this, when we look at the risks that we use in terms of, let's say I'm including AI as part of the build journey or as part of the user interaction journey. Now, what used to be set in stone, like I knew the outcome. So if I was giving out a customer facing app, I was aware of what the outcome was. And in case there was an error, I used to handle it. And this was conclusive. Now, when we look at an LLM, how an LLM handles it, right? We are training the model, or we are basically giving it an instruction to operate like a human, saying, now you have received a customer. Where do you put this customer in? Which product would be perfect for this customer? So far, this was hard set. I knew exactly where the customer was, and I knew exactly what I was going to do with the customer. Now, if I bring in AI there, I'll have to be very sure that the AI is doing exactly what my system should do, or a human in the loop should do. So the risk that I see there is, how do we make sure that wherever a human in the loop is not present, how do we make sure that AI is not hallucinating or moving out of the guardrails? That is exactly what I see as a risk as we move. But in terms of, if I had to give you a few examples here, let's say right now it's a human who is doing underwriting. A human is making sure that every single case passes through them. If I am bringing AI into the loop there, I'll have to be sure that even today, I'll have to be sure that if the OCR is 100% and everything is, we spoke about triangulation in one of the previous panels, right?
Yep.
If triangulation was perfect, I don't need to treat it as an edge case. But if, let's say, the data and whatever we are trying to match is not matching, then I definitely need a human in the loop, right? So there, like I take the stance of my panelists here. I will definitely want to have a human in the loop to make sure that the edge cases are 100% being dealt with without too much reliance on AI. So this might change in the next 1 or 2 years. I mean, it's already changing, but this might change. But as we stand, AI evaluations, making sure that, I mean, I'm also telling you how to kind of mitigate this risk in a short, probably in a 30-second answer. We need to have AI evaluations in place, very similar to how we do any kind of QA kind of objective, right? So we make sure that the prompts that we are putting in are being evaluated properly. There is a layer to observe it,
Yep.
and then there is also an evaluation layer to make sure that this is all the logs are being tracked. Which model? I mean, we understand which model is working fine, which model might not work fine. So this kind of a layer being put in place might help us mitigate the risk. I can go into it in detail, but yeah, that's broadly how we are looking at it.
So in effect, what you're trying to tell us, you definitely want to employ AI for this kind of a scenario where it will speed up the process, but at the end of the day, you still want the human in the loop to do a final decision making so that you can move to the next level appropriately.
Yeah, wherever, again, the point there is, wherever we see it as an exception, there I would want a human to,
Okay.
because otherwise, there again, we are overlapping on traditional BREs or traditional, again, like I said, old school code.
Yep.
But wherever we see that AI might not give you the right output, there I would want to treat it as an exception case, just like we are doing it today, and bring in a human in the loop.
Good. Vinod.
So, I'm picking from my co-panelists, we are still old school, and we shamelessly, I think, will remain old school for a few more years. And I think I really don't, not to offend anyone, I don't think we're going to be 100% trusting any of the models. See, the models have been tested pretty aggressively. We've done small data testing, we've gotten large data to test it. In fact, one of the use cases I probably want to speak about is we built a dynamic pricing model. We wanted to create a pricing model so that we understand that one size does not fit all, and we wanted the model to do a real-time assessment of the customer on the transaction, bureau scores, banking, BSAs, and any other transactional information, put them into the model, feed it into the model, eventually put it into risk segmentation, based on the risk segmentation and the demographic details and the quantum of the loan, figure out what could be the pricing. Now, while we were very happy about it, the risk segmentation will always do the same thing for a lookalike customer also. So the model thought X and Y are equal, despite them being two different persons. So this this I cannot be always be, I cannot spend sleepless nights on worrying that the model might false positives, right? Where something could go wrong and we would not even realize it went wrong until something actually breaks loose, right? When somebody starts defaulting. So that is why, despite all the models that we have built, the eventual button still remains with the human. So the model will eventually give you the quantum of the loan, the IRR, the tenure. Every specific is all predetermined, but it still reaches the person's mobile phone saying this is the offer made to the customer, is a yes, go or a no go. It's a green button, it disburses, then otherwise it. I understand I'm creating a hop, but I'll rather sleep tight tonight thinking there is a person.
I completely am in sync with you, definitely. See, when you are putting certain guardrails, it is up to the organization to look at how much of adoption is necessary. You cannot say I will do 100% of AI everywhere in terms of decision making, because some places it also can falter, like as he was rightly saying, it can hallucinate, it can go back and forth, it can go into loops. So where the models are still in the evolution process, we still need to take those checks and balances and guardrails into place. I do agree to it from that perspective. So coming to that, I will move on to Krishnaswamy sir. How do you see, what are all the, in the next 5 years, like they have said, he is going to only look at partial of AI adoption. Now, having you been the technology head and the CTO, how do you want to look at implementing a full-fledged AI or partial AI given the current scenario? Where would you want to look at it in the next 5 years? Or do you say, next 5 years, how many of the NBFCs and microfinance can adopt AI, to what percentage? What workflows will help?
Hello. See, adoption can start straight away. Okay.
Yeah.
Adoption can start straight away, but what kind of maturity levels it reaches, it depends on the organization risk, the ability, and how the technology shapes in future, and what turn and twist it is going to take.
Right.
Okay. So let us talk about adoption as of now. See, we are very clear with how we want to adopt. There are two use cases. Basically, you segregate it into Gen AI, and then you use it also as agentic AI, basically. Okay. Gen AI, in principle, for all the customer touch points where you have huge volumes, like doing a welcome call for a loan, or a sanction call, or a disbursement call, or you want to tell about any changes in the loan, this thing, or you want to make a pre-due or a post-due call for the collections. Those things can be automated through Gen AI, and it can greatly improve the efficiency and the level of speed it has. You have a big, huge CRM team, or you can also have a conversational AI bots doing that, which will help eliminate, fatigue, eliminate irritation, hesitation, frustration of so much which human naturally will have.
Right.
Okay. So there you can do that. And from an agentic AI, we have only defined use cases where it will improve efficiencies, manual work into an automation, into a better automation. Rather, it is like an add-on to the RPA process, which was earlier.
Right.
Okay. RPA, you can do a lot of automation. This can be a little better than what RPA was doing.
Absolutely right.
Like how you do when you do onboarding, if you are doing a quality check of the documents, that can be done.
True.
Okay. The failure rate is also, even if it fails, the thing is that it will go back to the sales team. The documents will be re-verified again, and it's going to come in for your onboarding, actually.
True.
So in that way, it is not going to affect basically this thing. And from a credit perspective, again, we do a credit recommendation engine rather than sanctioning it by the AA, basically. So what happens is, typically each credit officer at the branch does a credit appraisal memo, and then it comes to the head office or the central credit or wherever, whoever is approving the credit appraisal, basically. He will have a certain set of activities where he has to peruse so many documents for him to take a decision to go and do that.
True.
And every day with so much of volumes, when the organization is becoming bigger and bigger, and the number of branches increases and the number of sanctions per day has to increase.
True.
Keeping the growth of the organization in mind. So how are you going to eliminate, okay, if a credit officer has 50 files to sanction per day, probably he has around 8 to 10 minutes per file for him to sanction.
True.
So in those 10 minutes, how many documents do you think that he can
Peruse.
really peruse, basically?
True.
So this can be done through an AI where it can hugely reduce the manual effort.
So what you're saying is like what Vinod said, the AI can peruse such documents and give a kind of an analysis where it will enable the decision making easier for the credit officer.
Yes, the decision making can be quicker, can be faster. And also efficient.
Excellent.
So this will help. So again, in the quality check, you can do that. Even you can have it in the early warning systems. You can have that.
Yep.
Even in the AML, you can have it.
The reconciliation
Yes,
part.
reconciliations, VRS.
Yes.
Basically, you can have it. So these are the touch points and use cases. It is for the organization to identify where their pain points are there, manual effort is high, and where it can be automated without much risk as a first step. Okay, then you are successful. Then you are building the model within your system with on-prem itself, without your data going outside.
Yep.
For these things, you don't need you to talk to outside data and all
Very
that
true.
stuff.
Exfiltration.
So
not needed.
yeah, when you have this level of maturity, and then as the technology advances, even in AI, we are in the first level or the second level. Actually, we are in the context-based AI or in the next level of AI. There are so many levels of AI which can go through. Actually,
Yep.
we are still in the basic levels of AI, which is evolution is happening as
Right.
of now. So, keeping that in mind, we can improve efficiencies greatly across the lending journey, which will also give better, I feel, this to the customers, value to the customers.
So that was a wonderful insight, Krishnamji. So if I have to put it in a nutshell, probably we are trying to look at 30 to 40% of the mundane repetitive activities or analysis that needs to be looked at, where it can create more efficiency for the lending team to take a proactive action, the decision making. All these areas, this AI can be implemented. So which will start paving the path forward for us to start implementing. So I think almost spent about 40 minutes, 5 minutes I have. I think we have a chief risk officer out of Mr. Kalyan Raman probably. If you have any query on that. So can somebody give a mic, please?
So my question to all your practitioners would be first on the credit side. This type 1, type 2 errors, are they minimal with the you mentioned monitoring your exact first was credit recommendation engine. That and the human being, are the decisions coming out somewhat okay on the back test in that? And
Yes.
Within that, whether the assessed income versus the assessed income of the individual versus the assessed income of the machine, is there any kind of correlation? That would be this one.
Yeah. See, the first thing is that actually this perusal of documents and collection of information, I don't think there is much variance between a human and this thing, whereas an AI can do it a little faster than that. Where human errors, manual errors can be there, where he may overlook few pointers which needs to be overlooked. Second thing, income assessment, actually it is already built in, I think most of the organization would have built in static BRs already there, which is giving them that actually. So this AI also will take input from that. Okay, AI will find out, you don't want to reinvent a wheel which is already there and which is running there. Okay, you take AI also will take the input from there, and what AI can do and what a static BRE cannot do is finding out anomalies actually. If any anomalies are there, AI can find out. See, probably even today, a lot of people discuss that, okay, even your CIC score is a static data. Once in, maybe from 1 month, it has now become once in 15 days actually.
Daily.
But yes.
For banks, it is daily.
Yeah.
Score is 15
15 days. So that is also a data that doesn't guarantee the behavior of your customer after taking the loan. Okay. So these are the things which AI in the future can greatly help actually in assessing point or taking data from various sources. Okay, today you have an account aggregator, you have a bank statement analyzer. In bank statement analyzer, you are going through, you are reading all his credits and debits. You understand his spending habits as well as his income basically, and various types of income what he is getting. So these earlier it wasn't there, a year before or 2 years before actually. So you weren't knowing like how he is spending his data. Today it will clearly show if he's spending on any gaming or any this thing, it will clearly show you today. So that is a very definitely a key pointer for you whether you want to provide a loan to such a person. Okay, based on his spending habits. So there are enough data today which we can collect apart from the static, whatever the CIC score, a traditional way of evaluating. It is not like today traditional, see how affordable housing finance companies when they started actually, we can't look at the CIC score at all.
Correct.
So we have to see whether the intention of the customer, whether he is willing to pay and how he is earning his income. Whereas a salaried class, you have a bank account which is credited month on month. For a self-employment, how do you evaluate his income basically?
Correct. So, question for Mr. Vinod would be, with an organization with such a deep history, how do you see the evolution? Like on the one hand, you said there is fintech, and in the morning there was this famous quote about co-lending being a 23-year-old person marrying a 55-year-old person, gender neutral. So, like that, how do you kind of look at, let's say, the established organizations? Will they make a jump start, or will it be a gradual journey? How do you see that particular part of that? Because, and we recognize that used commercial vehicle is probably the most difficult of them all. It is probably more difficult than affordable housing or micro lab.
I'll speak for myself. It'll be 2 steps lower than gradual also. I'll give you the third option there, because see, legacy systems are also transforming them is going to take time. I told you about data sets not being in the right format. That it took us years to get those things right. And sir, very frankly, very conservative in nature. We just don't want to be in the race to win an award on being the first to deploy AI in the country. It's okay to be last there, but I just want to be safe than sorry. My clientele is more important to me. I want to service him to be right there in front of him. See, I've got 4,000 branches and 75,000 people on ground already. So do you think I'm going to replace all of them and have one system tell me what is right and wrong? I don't think that is one. I'm not trying to be the enemy here, speaking about against
so the question,
a product where everybody is trying to sell. But
question is, will you deploy on a CO to branch to a company? Like, I'm just transforming the model. Will you transform first from central office to the branch and get the branch to, like, there is this famous example where JP Morgan has deployed 3,000 laptops to various people, and I think Jamie Dimon has told them, you do what you want, but please get me some save.
We are exactly doing what Sir also mentioned, right? We are just trying to take away all the rudimentary, mundane, repetitive work out of the way, so that the end user, my feet on street, is not brittled with all that work that he was otherwise doing. So I'm just taking away that pain point for him. I am providing some kind of intelligence to him to do things faster, do things efficiently, but eventually take that call himself, because he's the person who's been taking that call, which has brought this company for 50 years. So I'm not going to take, I'm going to trust that person more than the tech. So, but then I am just enabling that person with more information, more validated information that was otherwise in shadows. For example, Sir mentioned, can you run through 18 documents of bank statements and see an anomaly in one of them? Human eye will miss it. Sir was speaking about inputs and debits and credits. And do you see merchant categories where he's spending? Is he a chronic spender? Is he a non-chronic spender? What is the frequency of spends? I'm very sure a human would definitely miss it. But my model will read through it. The model will show a scorecard which will say, maybe don't take a certain amount of leverage, the sanctioning amount can be contained here. Looks like he spends around this dates. So these are things that definitely my person will miss. So I'm just enabling my person to be more smarter in the way he's sanctioning. So it's again a marriage, sir. It's going to come together. You cannot go around it. I cannot close my eye and say I don't want to use it. I am either by choice, by chance, or by force going to use it. But I'm just going to be a little more careful on how I use it. That's all.
Okay. Sir, for you, the question is, agree there is so much of AI which is there, and there is so much of data on reservoir levels, drought, rainfall, crop patterns, and all that.
Right.
Is there any magic sutra that has been useful in Samunathi's journey where it helps you, like, let's say, random example, milk prices in a particular district, have they moved in a particular way, or so many other, any such kind of inputs which accrete to your decision making?
Yeah, so I'll add on to what Vinod was saying. So a slight deviation to the approach that Vinod sir was just talking about. So we do. I'll answer your question as well, but I'm just adding on top of the previous answer. So similar to what he was saying, we do empower most of the RMs or people on the ground to take decisions on their own. But in some cases, for example, in case I want to originate a loan, but I have to take a decision on whether I want to put it into my book or into a bank's book as part of a co-lending arrangement. Now, the origination part where they collect the data, that is still the same. But there's a part where we have a fork in the road where we have to take a decision. When I say we, the system has to take a decision on whether it is clearing the BRE of the bank as well as our BRE. And depending on that, we'll have to push the data through. So there we do use, now it is plain Jane code, but as we move forward, we see a very good use case for an LLM there. Again, from a user experience point of view, we don't want to collect all, let's say I'm doing it with 10 banks tomorrow. I don't want 10 banks might have a different set of credit policy to all through together. So I don't want to collect all the data points for all the 10 banks. Again, this is a very specific use case, but in this case, I'm transferring the cognitive load to the system, rather than for the RM to take a decision. A slight deviation from what Vinod was just mentioning. In terms of what you asked about, we do have a wealth of information. We have live information for about 7,000 FPOs. We have data for about 30 lakh farmers, and we have been in the business for 11 years. Everything that you said, right down to soil sciences, how does milk production change with respect to geography, with respect to seasons, all those is something that we do tap into. But we use it, I'll say, primarily for our marketplaces. And yeah, we do have a lending option there, which means that we could give you an input loan for like an input farm input marketplace, or we can do it for an output marketplace or a trade kind of an arrangement. So the data that we mostly tap into is in terms of which FPOs are more active, which farmer producer organizations are more active, how many of them are really into a specific type of example that you picked up. Funny you should say that, because we are more into cattle loans as we speak. Right, so the FPOs, we are in touch with FPOs south of Chennai, where milk production and other data is being collected. Most of the heavy lifting happens even before my RM goes into the field. So that the information that comes in from milk pouring data, information that comes in from where repayment has been much more successful from our legacy data as well as from the market data, is what we start with, and from there is where we start our origination journey. We send RMs feet on street, and then ask them to originate, collect the data and all that.
Thank you.
Moreover, rather than productivity, AI, as you said, soil health, reservoir levels, these things, it will improve the quality of what the produce at the end of the day. The quality of milk, cattle health, hygiene of the cattle. These things can greatly improve. If you see, Telangana government few years before did a study of the cultivable land in Telangana, and they found out exactly like how much of water is needed for this season, for these crops actually, and how the water can be diverted to ensure that the crops farmers can have the water. And see, it can help us if we use it in the right way, if we can focus on improving the quality of life or quality of outcomes of what we are already having, it can definitely do. But the thing is that the effort has to be there to improve that.
It will not be first order, it will probably be second order. That is what is, I think, the overall conclusion. It will not directly impact whether you get the customer in or whether you lend to a customer or etc. But it will be second order kind of a thing to start with. Could you say that? So, I mean, you will help the branch, and for instance, here you will say that quality of income will improve in that particular catchment. So you may put up a branch in that area and not a branch in another area. Something like that. Would that be a right assessment?
Yes.
It's yes. So typically, if I have to summarize this over the next 5 years, based on whatever discussion that has happened so far, we definitely see a lot of scope for inclusive AI, where it will start looking at user entity behavior analysis from multiple set of sources. It will enable the microfinance and NBFC to take the decision appropriately at multiple levels. Not necessarily that you need to go full-fledged on implementing AI. Depending upon the organization's requirement, the journey can proceed, and probably 30 to 40% of the overall workflows can get automated and AI can be used over there. If my assessment with whatever we have discussed so far, this is where we stand as of now. Thank you for the audience and patiently listening to us.
Now, ladies and gentlemen, this is going to be the most awaited evening for the day. Yes, we're going to be honoring our partners very shortly. We request the hotel members to clear out the stage. We're going to be moving forward for the award ceremony. So I request Mr. Priyansh Rawat, founder and CEO of FinTech Media, to please join on the stage to present the award. Yes, it's NBFC FinTech Synergy Awards 2026, and the first person to receive this award is Aditya Birla Capital Limited for the best customer-centric IT implementation. Let's give them a thunderous round of applause, ladies and gentlemen. People from Aditya Birla Capital Limited, please join us on the stage to receive your deserving award. Congratulations. The next award is a very special award, which is the category of the award is Out of the Box Thinker. Okay, and the person who's going to receive this award the next award is a very special award, and the category that has been mentioned here is Out of the Box Thinker. The award goes to Nitishwaram. Yes, he's from Flexi Loans. Let's give a huge round of applause for the Out of the Box Thinker. We have Mr. Nitishwaram is here. Congratulations. Here comes a very interesting award, which is Young Leader of the Year. the young leader of 2026 year. And the organization is Quantrium and the person is Devanshu Jain. Come on everyone, let's give a huge round of applause. जोरदार तालियां हो जाइए उनके लिए நல்ல சத்தமான கைதட்டல் கொடுக்கலாம். And next we have another special award, Trailblazer of the Year, and the award goes to Shriram Finance Limited, and the person who received the award is Mr. Vinod Kumar, Chief Digital Officer. Let's give a thunderous round of applause to Mr. Vinod Kumar. Congratulations, Vinod Kumar. The next award is the Best COO of the Year, and the award goes to Udish Ulla, CEO from Muthoot Microfinance. He's not here. And the next Best CFO of the Year, and the award receiver is Anne Mary George, CFO from Muthoot Microfinance Limited. Congratulations, ma'am. I request Anne Mary Josh to kindly stay back, because next is also from your organization is receiving the award, which is Best CTO of the Year, and the award goes to Mr. Vinod Kumar. Mr. Vinod Kumar is not here. I request Anne to please collect on his behalf. Congratulations to Anne Mary George and Mr. Vinod Kumar from Muthoot Microfinance Limited. And the next category is Best Upcoming NBFC. Okay. Best Upcoming NBFC, it goes to Nesta Via Home Finance Private Limited. Please put your hands together, everyone. And the next award is Best Use of AI in FinTech, and the award goes to Quantrium. Request people from Quantrium to please join. The Best Use of AI in FinTech. Kalyan Raman sir, you can also join. All right. You all belong to the same organization, I thought, yeah. Vaibhav, you can also join on the stage. Yes, we are there to help you out, clicking the nice pictures. Congratulations, Quantrium, for the award. Congratulations. Alright, the next category of award is Best EV FinTech of the Year, and the award goes to TUK Industry Private Limited. Let's give them a thunderous round of applause to have them onto the stage. the most trusted NBFC of the year, and the award goes to and the most trusted NBFC of the award goes to Furer Capital Private Limited. Let us give a huge round of applause to have them onto the stage, please. Congratulations. Alright, so we request all the awardees to please join on the stage for a group picture. All the awardees. Yes, all the awardees. All the people who have just received the award, please join us on the stage for a group picture. So request everyone to give a big smile because you all received the award of the best performer of 2026 years. Can we all once again give them a huge round of applause? So thank you everyone, thank you so much, and once again congratulations to all of you for this wonderful award presented by NBFC FinTech. Alright, so yes, here we have come to the end of the session. Thank you to our esteemed panelists for sharing your valuable insights, experience and perspectives. Your contribution have made today's discussion both engaging and enlightening. We also extend our sincere appreciation to our audience for your participation and thoughtful engagement. We hope that ideas shared today inspired meaningful conversation, future collaboration. On behalf of the organizers, thank you for all for making this event a grand success. Looking forward to see you all in another event. Until then, signing off. Hazi, have a great year ahead to everyone. Thank you. You all can now leave for the tea coffee break and you can go back home. Thank you so much.